The IMF, they've downgraded your forecast to below 1%, just 0.7%. You're still expecting, or at least in your previous forecast, growth of 1.5%. Some even now expecting recession in South Africa. You tell me at this point, where's the reality?
Well, the figures of 1.5 is what we expect the outcome of 2015 to be. Next week, we will be meeting as the MPC. We will present our new forecast. Next week on Thursday, we will come out public with that. What we can't take away from is that South Africa is facing a policy dilemma from a monetary policy perspective, that you are having slowing growth and you are having rising inflation. It is not something that we didn't expect. As such, we started adjusting monetary policy in January 2014 because monetary policy have an effect with a lag. So we started our tightening path in January last year, cognizant of this dilemma. And as such, the tightening steps that we had taken had been very measured, have not been unlike the previous tightening cycles that we had seen.
You've limited them recently to 25 basis points. The market looking for something with a little bit more conviction. Are you willing to go that extra step, increase the magnitude of those rate hikes?
Well, remember that when we started the cycle, we actually started with 50 basis points, not with 25 basis points. Given where the policy rates are, a 25 basis point hike is not a small hike necessarily. But we do think that since the previous MPC, the inflation outlook has deteriorated. We had always warned that the movement in the currency is a concern for the inflation outlook, and what then complicates the stuff further had been what has been happening with food prices and the like. A compensating factor has been the decline in the oil price. But if you look back, you would realize that if the oil price had declined and the currency didn't move in the manner that it has moved over the past 3 to 4 weeks, the petrol price in South Africa would have come down significantly.
Well, Governor, the reality of the situation is since you last met, the South African rand, dollar rand, is up about 20% since then. Surely that has pushed the inflation outlook even higher than where we are now. We're north of 5%. If things stayed as they were, you'd expect the inflation rate to pull out away from your target band, wouldn't you?
What matters is the nominal effective exchange rate rather than just the bilateral between the dollar and the rand. The dollar does have a big weighting in our nominal effective exchange rate.
Yeah.
And next week, as we meet, we will consider these things, we will deliberate, and then I'm sure we will arrive at an appropriate stance.
How willing are you to step in and try and stabilise the South African rand? The market is going after these currencies. They're going after the South African rand. How willing are you as a central bank governor to step in and stabilise it?
Well, I have actually seen that so many other emerging market currencies had depreciated. Last year, funny enough, when I was sitting in this chair with your colleague, she asked me what I think is going to happen when the Fed starts to normalize rates. And I said that when the Fed starts to normalize rates, we expect that emerging market currencies, including the South African rand, will depreciate. And so this adjustment is taking place in that context. That said, we also said that our concern is not so much the move in the currency, is what that move in the currency means for the inflation outlook.
And what does it mean?
Yeah. Well, without a doubt that the depreciation of the currency is a threat to the inflation outlook. It means that inflation will rise. And as at the previous MPC, we expected that we would have two breaches of our inflation target this year. And hence the kinds of moves that we are doing. That's why you saw us starting to move at the previous MPC meeting. And so I know some commentators said, oh, today inflation came at 5.2. Yeah. The Reserve Bank, clearly the Reserve Bank must be doing something about this. But there's nothing we can do about December 2015 inflation. There is something we can do about future inflation because the nature of our policy setting is actually forward.
There is. How close are we to the point, though, that inflation expectations risk becoming de-anchored in South Africa? Are we close to that point?
Well, at the moment, the inflation expectations have been bubbling around 6% or outside of that 6%. We expect that actual inflation this year would be outside of target in 2 of the quarters. And a combination of those 2 factors could actually lead to a de-anchoring of inflation expectations and would call for the monetary authorities to act with resolve. And that is why we started to take those steps in January 2014.
Do you anticipate more weakening in the South African rand as things stand? We've approached 18 already. Can it go much, much further than that?
I've stopped watching the Bloomberg screen because these things move in so many different directions. If there's any economist out there who can say to me that they think they know what any particular currency would do going forward, they surely deserve a Nobel Prize in economics.
Well, Governor, here's a question for you. If there's a dilemma for a central bank governor, it's upside risk to inflation and downside risk to growth. How do you manage that? Where do you put the weight for your policy?
Well, that risk is what South Africa is that dilemma is what South Africa is currently facing. And what we are having in South Africa is that we have got an anchor of monetary policy, and our anchor of monetary policy is the inflation target that we have. The Constitution says we must pursue our mandate in the interest of balanced and sustainable growth in the Republic. And what the dilemma then poses for us as the monetary authorities is that you end up having to pick one or the other. You cannot avoid that trade-off. And back to your earlier question, if then there is an indication that there is a de-anchoring of inflation expectations, to maintain the integrity of the inflation targeting framework, we will have to adjust the monetary policy stance.
So at this point then, there's a risk that the government is going to tighten the budget, and there's also the incredible likelihood at this point that you're going to tighten rates as well. Is there a risk of a recession in South Africa?
I don't see the tightening of fiscal policy as a risk. I see it as a welcome development. It reflects the resolve of the South African government to say that what we are faced with now, we have got to take determined steps, and it is a welcome development. The narrative in South Africa had always been that what you would prefer to be having is a tight fiscal stance and a loose monetary policy stance. Now we're facing with a situation where fiscal policy tightens and monetary policy has also been tightening. They are acting in sync, and I think that what I would like to leave you with is that we are not inflation nutters.
No.
And the steps that we take in dealing with the South African inflation challenges are done in the interest of balanced and sustainable.
So we go into next week, and you've got the MPC meeting of next week, and at this point the economist estimates are looking for a 50 basis point hike. The forwards market looking for something slightly lower. Do you pay attention to that? Are you aware of that as you go into that meeting, that you have to meet those expectations?
Well, one of the presentations we have during the MPC is a presentation from our markets team. We do watch these things, but they are just one of the things that we look at in arriving at our stance. These things are guidelines. Even our own modeling forecast is just but one input. No model, no market indicators could replace policy judgment.
What's the one question you guys need to answer when you sit around that table at the MPC? What's the one question you need to answer at the South African Central Bank meeting next week?
Lots of questions.
What's the one question?
We can't answer just one question. There are so many questions we must ask. We're facing a policy dilemma that we have outlined. We are having a situation where inflation expectations are bubbling outside of our target. You are having a global environment that is uncertain. No one can tell what is happening with this market. And we have got to take a totality of all those into account in arriving at our stance.
Do you have the power, the tools left on the table to contain the risks that inflation becomes de-anchored?
Well, the thing about monetary policy is that it is so straightforward. You have got an anchor of monetary policy, which is inflation, and you have got the policy rate as your tool to tackle inflation.
Final question. A couple of weeks ago, Sunday, if you were up late enough, you would have seen this flash crash in the South African rand. It didn't make sense to a lot of people. How can you prevent those kind of things? Do they come up on your radar? Is it something you have to think about?
It is something that we are concerned about. It was not just this Sunday. There was another flash last year. And these things tend to happen during the Tokyo trading time, and it happens at the time when liquidity is thin. 70% of rand trading actually takes place outside of South Africa in the major financial centers. It's something that we have been looking at, and we would like to understand what is that flash, because it doesn't look like trading actually takes place.
You don't think it reflects fundamentals?
We don't think that it reflects fundamentals. You can see it is a flash because it happens for such a short period of time, and then it disappears, and then you see the.
But does the spot price reflect fundamentals, given what's happening in the global economy and given what's happening domestically in South Africa?
Did you say swap prices?
The spot price.
The spot price. No, you know, the thing about exchange rates is that exchange rates do overshoot. What you can't have is central banks thinking that they have got a particular view of where their own currencies should be. Because I don't think that any central bank can say with conviction, this is where I think the currency should be. In our case, we have decided that we are going to have a floating exchange rate. There are times when this exchange rate was at 6 rands to the dollar. I guess we could have asked that same question and said that, is it in line with fundamentals? And I guess we can ask the same question when it is at 16 rands odd to the dollar. And somewhere in between lies the truth. What is clear is that a central bank, there is nothing that a central bank can do to stop a currency to adjust to where fundamentals should be. As I had said, exchange rates do overshoot. To the extent that this one has overshot, it will come back and adjust to the fundamentals.